Good to see you, Tao. So you were expecting a rate hike
Good morning.
in April, but we don't get this inflation data until the middle of the month, and we've gotten this rate hike a bit earlier than some may have expected. Does that mean that the inflation figures come in uncomfortably high?
That may be the case. We indeed expected a rate hike in early to mid-April. I think the authorities, including the central bank, probably already have a good indication of the March number. And so they are getting used to doing it just a week earlier than the data coming out. We expect the March CPI to have climbed above 5% to maybe reach 5.5. That's actually largely related to food prices, and there's some base year effect as well. We think there's another rate hike coming in this quarter as well.
So does this show us that the Chinese government is very serious about its battle with inflation? Because some in the market had thought that perhaps the tightening cycle was coming to an end.
Well, indeed, in the last month or so, people, for some reason, there are some thought that the monetary tightening is coming to an end, and that's not our view. But we also don't think the rate hike this quarter indicate a additional tightening or further tightening or tighter policy stance they have shown in the first quarter either. Because in China, monetary policy is mainly done through quantitative measures. So that's the RRR hikes as well as the credit quota. On that front, the PBC have been able to keep things under control in the first quarter. On interest rate, that's mainly a chaser of CPI. So as long as CPI remains elevated above 5% in the second quarter, we think there's more rate hikes.
So you're saying that they're going to continue pretty much as they have in recent months, with more hikes to interest rates and also the RRR figure, correct?
That's right. We expect multiple adjustment in RRR, and the central bank continue to guide banks in terms of the amount of credit lending out to the system, and those are more important for overall growth and overall monetary policy stance. Interest rates is really more related to the CPI figure itself rather than guiding the lending and liquidity.
Understood. Now, what about the trade deficit? You're expecting a deficit for the whole of the first quarter. What does that mean? How long till we return to the surplus that we're used to seeing in China?
That's right. I think this year we will see a first deficit in a quarter since 2004, and that key reason is that China's domestic demand is pretty strong, but secondly, commodity prices have increased, and so China's imports prices have increased a lot. That we think is going to be temporary, so we're still expecting a sizable trade surplus of around $150 billion this year. It's smaller than last year, but it's still sizable.
And as far as growth for the first quarter, you're expecting 9.5% from a year ago. That still seems quite high, doesn't it, when you have the Chinese government trying to cool growth?
That's right. We think growth is only slowing gradually. Comparing to the fourth quarter, this quarter is going to show a sequential slowdown. And some people fear that second quarter things may get worse. But in our view, we think investment could pick up in the second quarter. So growth for this year is going to still be 9.5%, slightly slower than last year, but still very solid.
All right, Tao Wang, head of China research, economic research at UBS Securities. Thanks for being with us.